Next up, we'll be talking about an umbrella policy. And what is an umbrella policy? It's just higher limits. All it is higher limits over your personal liability. So that's what's associated with your home. And there's some people get a little bit confused about this. So my personal liability, it comes on my homeowners or renters policy. That's where I buy that underlying coverage, but it extends to any of my activities. It's not limited to the home. So think about you're in a grocery store and you hit someone's back of their knee with your cart and they injure their knee. That's a personal liability claim on it. Your dog bites someone. You have a dinner party and some guest gets overserved and gets an accident on the way home and you get sued. All personal liability type claims. And your umbrella policy is going to go over that. And the reason they call it an umbrella is it goes over multiple policies. So it goes over your personal liability, also goes over your vehicle liability, your auto liability. And that's the most common type of big claim would come from your auto liability. That's the biggest exposure, but certainly there are large claims that happen. I think like if you have a swimming pool on your property or something, and God forbid, someone's injured, breaks their neck
Yeah.
in the pool type claim. We've
Yep.
seen those types of things, unfortunately. An umbrella policy will also go over toys. So watercraft, ATVs, snowmobiles, all those types of things, important that they're scheduled on your umbrella. So let's talk umbrella. So now we know what it is. How much do you need for your umbrella? Everyone's going to be unique depending on, what their risk profile is. So are they a highly recognizable name that if something happens for them, they're going to have a big target on their back? Do they have a lot of exposure, meaning lots of homes, lots of toys, lots of boats, those types of things that are a little bit higher? Not to say that you're going to have more claims with them, but if you do have a claim, they're a bit bigger in the exposure. So what we tell people is you should match your net worth, or if you're a younger person building up your net worth with a high salary and high earning potential, match your net worth up to 10 million. So if you have a 5 million net worth, have a $5 million umbrella. If you maybe have a 2 million net worth, but you're on your way to 5 or 10, then match your net worth or future earnings up to 10 million. Once you hit the 10 million mark, then it doesn't make sense necessarily to go dollar for dollar. So we have formulas that you use. It's, roughly 15% of your net worth for the next 50 million. So if you think about someone who's got a $50 million net worth, we're probably saying they should have a $15 million umbrella. After 50 million in net worth, then maybe use 5% of that number to determine. So again, $100 million net worth should probably have a $20 million umbrella. And you can use that as a rough baseline on it. And again, go higher if you're in a higher profile, lots of toys, youthful drivers. Unfortunately, kids are a big exposure for you. We mentioned rental properties before. If you have rental properties in your name, it's difficult to. Um, but this is where it's kind of an interesting concept for people is if you think about your umbrella limit, that is what an insurance company could potentially pay on your behalf if you have either a settlement or a judgment against you on it. Okay. So following me on that, what they're going to spend in defending you is in theory an unlimited number. There isn't a cap on that number. So if you have a $20
Mhm.
million umbrella, the insurance company could spend any amount, 20, 30, $40 million in defense costs for you. And it's not going to erode that limit of insurance that you have. So
Mm.
the mindset here is if you're in a bad situation, so you had a family member who caused a really bad accident, whether it's in a car or whether it's on, a boat or anything like that. What you don't want to have is too low an umbrella policy and have an insurance company be like, wow, this is a really messy claim. We're just going to kind of leave over that door right there. And you bought $1 million policy from us. Here's $1 million. We know it's not going to be enough, but that's all you bought from us. So here's your $1 million check for whatever the jury awards against you, and you're on the hook for everything else. Like that's a really, really, really bad situation for someone.
Mhm.
Instead, what you want is, let's say you have a $15 million umbrella and the insurance company thinks, okay, this is bad. Like this is going to be $1 million or $2 million claim against us. We're going to hire our A-team defense and we're going to spend 2, 3, or $4 million in defending this claim to make sure that it doesn't go in front of a jury, or if it does go in front of a jury, that we're going to, again, spend more money than what we think we're going to pay out for the particular claim, because that insurance company is looking at it saying, we don't want this $2 million loss becoming a $15 million loss. Um, and so high umbrella limits for yourself, Now all of a sudden you're in lockstep with the mentality of the insurance company on it. And what you both are concerned about, we don't want this going in front of a jury, and we don't want to see this thing getting, highly inflated and hurting both of us in that scenario. So that's the reason for carrying that big umbrella. It's also the reason for making sure, if possible, your umbrella carrier matches your auto carrier and matches your home carrier. Because again, if you're in a situation that's an auto claim, very common, and we'll have clients who'll be like, man, we want the Chubb umbrella, but their Chubb auto is just too expensive. And it could be, they are not the low cost carrier. So it's not inconceivable that you could go to a Progressive or someone like that and get a policy that's several $1,000s less expensive. That client's in a bad situation in the event of that catastrophic loss, which again, that's the whole reason why you're buying this insurance. Is if you're the unlucky person whose number comes up and it's a really messy claim, you don't want to be that one who's like, the insurance company, and especially if you have two different carriers, they're not necessarily going to have their interest align or your interest align. Those are very, very bad scenarios, super uncommon. We have had it happen though to our clients, and the difference in, again, either way, it's a terrible situation.
Yeah, yeah.
One of those situations isn't going to impact their net worth or their future lifestyle, and the other one, unfortunately, could.